Right here on Smart Stock Sam, I told you something big was building beneath the surface of DVLT, Data Vault AI. I told you institutional money was quietly accumulating. I told you a major revenue catalyst was coming in mid-February. And I told you that if the 74-cent floor cracked, we'd land exactly at 67 cents. Every single one of those calls validated. So today, we are doing a full deep dive post-mortem, unpacking record-breaking fundamentals, a tidal wave of Wall Street money, explosive global deals, and the warrant and meme coin distribution that is about to shake this stock to its core. The setup we have been tracking for weeks is not dead. It has been delayed, and that delay may be the greatest gift this stock has given us. Stay with me, because by the end of this video, you are going to understand exactly what is happening, what comes next, and where the smart money is sitting right now. But before we get into all of that, let me give you a quick roadmap of what we are covering today. We are separating the signal from the noise, validating our previous thesis, breaking down 1,300% year-over-year revenue growth, revealing which Wall Street titans just entered this position, walking through the global expansion plays, identifying the short squeeze fuel that is building up, and laying out your exact price roadmap for the week ahead. This is the most complete DVLT breakdown I have ever put together. Let's get into it. Here is the thing about this past week. On the surface, it looks ugly. The price dropped over 5.5% right after some of the most bullish fundamental news this company has ever released. That is the noise. But peel that back, and the signal underneath is flashing like a supernova. We are seeing a massive upgrade in guidance, institutional buying that is frankly unprecedented for a stock at this valuation, and partnership announcements that are reshaping what this company even is. While short-term traders are rage selling out of frustration, the underlying business is screaming opportunity. This is a high-stakes tug-of-war between retail emotion and institutional conviction. And historically, we know who wins that fight. Now I want to take a moment to acknowledge something, because I know some of you have been watching this channel closely. Our February 14th analysis was not just right, it was eerily precise. We called institutional accumulation happening quietly behind the scenes. Validated. We called for a major revenue catalyst arriving in mid-February. Validated. And we warned specifically that a breakdown of the 74-cent floor would send us directly to a test of 67 cents. As of February 20th, that floor has failed, and we are sitting exactly where the charts told us we would be. This is not a thesis failure. This is textbook execution of the price action we mapped out weeks in advance. But here is where even I had to sit back and take a breath, because even I did not expect the sheer scale of what hit the wire on February 17th. Data Vault AI did not just meet expectations, they obliterated them. The company raised its 2025 revenue guidance to between $38 and $40 million. That is a 30% increase over their prior estimates. And compared to their 2024 base of just $3 million, we are talking about 1,300% year-over-year revenue growth. Let that number sink in for a second. 1,300%. This company has crossed the line from speculative AI story to a genuine revenue-generating machine that is scaling at a pace most companies spend a decade trying to achieve. And management is not stopping there. They have reaffirmed an aggressive $200 million revenue target for 2026. That is a 5x multiple from their already upgraded 2025 base. In a market obsessed with AI profitability, DVLT is handing investors a clear, validated, and increasingly credible roadmap. But here is the thing that changes everything for long-term holders, and most people are sleeping on this. It is not just the revenue numbers, it is who is buying the stock. While retail traders are hitting the exit button, Wall Street is walking through the front door and sitting down for a long stay. Institutional holdings have surged by over 370% in the most recent quarter. We are now looking at 86 distinct institutions holding over 36 million shares. This is what I call the institutional floor. When smart money moves in at this scale and at this price level, they are not looking for a quick 5% flip. They are positioning for a multi-year revaluation. And you do not build a position this size unless you believe the price you are paying today is going to look laughable in a couple of years. Now, here is where it gets even more interesting. We are not talking about mid-tier funds taking small exploratory positions. State Street Corporation, one of the largest asset managers on the planet, has established a position of over 10 million shares. And right alongside them, the high-frequency powerhouse Jane Street Group has taken on over 4 million shares. These are Tier 1 institutions. They do not enter sub-dollar stocks without a very specific conviction. Their presence here is not a coincidence. It is a signal, and it validates everything we have been saying about the valuation disconnect in DVLT. So what is actually powering the growth that has Wall Street this interested? DVLT is executing what I am calling a global pincer move. In South Korea, they have partnered with the T-Burn chain, targeting the massive K-Wave entertainment and esports market with a blockchain capable of 156,000 transactions per second. At the same time, they have moved into South Africa through a joint venture with Mandela Digital Ventures to launch financial inclusion tools by the second quarter of 2026. These are not press release plays. These are strategic footholds in two of the fastest-growing digital economies on Earth. And if you thought that was enough, the monetization strategy gets even bolder. DVLT has locked in a 50-50 revenue-sharing agreement with the World Boxing Council to deploy data tokenization technology at championship events. And for the crypto watchers in the audience, the Josh Gibson stablecoin and NIL exchange are slated for the second half of 2026. DVLT is building a full data-as-a-service ecosystem that bridges sports, finance, and celebrity influence. The question is not whether this business has legs. The question is how fast it can run. So if everything I just described is true, and the data confirms that it is, then why on earth did the price drop 5.5%? It comes down to a classic sell the news event layered on top of one very specific operational frustration. The board of directors delayed the Warrant and meme coin distribution from its original mid-February dates to February 27, 2026, 10 days. That is all it took. In the stock market, uncertainty is poison, and even a short delay on a highly anticipated distribution was enough to send short-term traders scrambling for the exit. The fundamentals have never been stronger. The price action just does not reflect that yet. Now let me be completely objective with you about the chart, because I am not here to sugarcoat anything. Technically, this chart looks bruised. We are in what the indicators are classifying as a strong sell phase. The RSI is sitting at 41.9, approaching oversold territory, but the trend is undeniably broken below the major moving averages. The 74-cent floor has failed. But here is the thing about technical extremes. The best entry points in history almost always look terrifying on the chart. And this setup is starting to look a lot like a spring that has been compressed about as far as it can go. Here is the fuel that could make that spring explode. Short interest on DVLT is sitting at over 27% of the float. And on February 20th, over 62% of total volume was off-exchange short selling. The bears are leaning hard into this breakdown. But with a days-to-cover ratio of 3.12, all it takes is one positive catalyst, or even just the arrival of that February 27th distribution date, and we could be looking at a massive short squeeze that catches those sellers completely off guard. Before I give you my analysis on next week's trading setup, I need to give you an important reminder. Nothing in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is for educational and informational purposes only. DVLT is a highly speculative stock that carries substantial risk. You could lose money. Always do your own research, consult a qualified financial professional, and never invest more than you can afford to lose. The stock market involves risk, and past analysis, even accurate analysis, is not a guarantee of future results. Here is your exact price roadmap. Current price sits at 73 cents. If weakness continues into next week, the buy zone, what I am calling the maximum pain bottom, is between 67 and 71 cents. On the upside, reclaiming 73 cents is the first sign of life. The real psychological ceiling is 80 cents. Clear that, and we are looking at a relief rally target of 88 cents in the near term. Wall Street analysts have a $4 price target on DVLT, which represents 448% upside from current levels. This is a bottom fishing setup and the clock is ticking. Mark your calendars for the week of February 23rd, because this is where things get critical. Expect extreme volatility as we potentially test that 67-cent support level. But the real catalyst arrives on February 27th. The new distribution date for the warrants and meme coins. If that goes through without another delay, it clears the uncertainty that has been strangling the price, and we could see a rapid move back toward previous highs. Could we see another delay that sends us below 67 cents? Could institutional interest suddenly reverse? These things are possible, but the probability diminishes every single day as the business fundamentals grow stronger. With that said, here is SmartStock Sam's final verdict. DVLT is a high-risk, high-reward speculative buy or hold. Yes, the technicals are broken, but the fundamental story has never been stronger. The institutional accumulation is unprecedented. The global expansion is real, and the catalyst on February 27th has the potential to be a massive clearing event. The explosive move we have been talking about for weeks has not been canceled. It has simply been delayed. The smart money is waiting at 67 cents. The question I will leave you with is this: will you be positioned when it moves? If this breakdown gave you clarity, do me a favor and drop a comment below. I want to know what your price target is for DVLT by the end of March. If you found this valuable, hit that like button and make sure you are subscribed with notifications turned on, because the next update on this is coming fast and you do not want to miss it. This is SmartStock Sam. Stay disciplined, manage your risk, and I will see you in the next one.